Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is Forex Quick Look. I'm going to take a look at the dollar versus Canada. This week, the dollar versus Canada has seen 5 consecutive days to the upside. As a matter of fact, the price has been trending pretty nicely to the upside here, with a few days to the downside along the way. But most of this price action is every day a little higher, a little higher, a little higher, a little higher. Technically, what we saw this week was the price get above the 200-day moving average and the 50% retracement level. We did stall against that 50% retracement level on Monday's trade and rotated back to the downside on Tuesday. We found support near the 200-day moving average and pushed above the 50% retracement. As you can see right here, the price on Wednesday based against the 50% retracement and moved higher. Now the move to the upside has found the 61.8% retracement of the same move to the downside. By the way, that is the 2023 high to the 2023 low. So the range for the trading year, as you can see, we moved just above that 61.8% retracement level. Also corresponded with these swing levels through here. So it was a somewhat a key level in trading, or is a key level for traders with these highs right here and these lows right here before breaking to the downside. Again, moving up toward it, and also the 61.8. So this area right here near the 135.67 is a key resistance on the top side, and that may give traders a reason to sell, at least for a short-term corrective move back to the downside. That may see the price move down back to retest the 50% retracement or even the 200-day moving average. We'll see. But if you have an inkling to sell the dollar versus Canada, sell the dollar, buy the Canadian dollar, this is the area to lean against. If the price were to go above that level, get out. That's what I would suggest for you as a trader. Let's take a look at the hourly chart and see what that is telling us. As you can see, there's not much in the way of bearishness off of this chart from a technical perspective. We're above the 100-hour moving average. That's the blue line in this chart at the session lows. This week, the price found support buyers against that 100-hour moving average. And if you look at last week's trading, I guess this is 1, 2, 3, 4, 5. Last Friday, we moved briefly below that level and rotated back to the upside immediately. Admittedly, on Thursday, the price also moved below that level. But most of the time, the price has been above the 100-hour moving average. That's more bullish for this currency pair. We also are above this old high right here, which was equaled earlier this week, and tried to break above it here, and until finally the market was able to base against this area. It starts to move to the upside during trading yesterday, so that is more bullish. And also this swing area up here is forming some short-term support and resistance levels through here, these swing levels, and we based against that level before moving to the upside. So close support on the downside that traders would want to get to and through is 135.17 to 27. If the price is able to get through that level and then below the 100-hour moving average, and something is up a little bit more to the downside in this currency pair. There's a look at the dollar versus Canada. We know we have a key resistance up at the 135.67. We know we have support, however, that needs to be broken, including 135.17 to 27 and the rising 100-hour moving average, to prove that the sellers can take more control. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.